Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 10th of April and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. So this is episode 18, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big industry stories across franchised and independent sectors for you to enjoy all in one place on your podcast feed.
So lots of headlines. You know, we've Scotland opened on Monday for the car showrooms, just as we came out of the bank holiday Easter weekend, and we're looking forward now to England and Wales this Monday, aren't we, Curtis?
We are indeed, yeah. Big day. Lots of preparation going on at the moment, lots of activity, and this has been on the calendar now for a little while. So, it's we will actually be talking about the March market because that will obviously play into what happens in April. But it's just welcome news, isn't it?
It is, yeah. And again, I think it's not getting any easier to understand what is opening and what isn't opening. I think there's on Friday of this week, lots of conversations about what Wales are doing, where they've brought dates forward and put dates off and all sorts of things. So, but at least it's happening, isn't it? That's the key. And I think lots of conversations now about holidays is now back on the agenda, isn't it? Yeah. Where you can go, if you can go, and whether you need a passport, a COVID passport to be able to go. So yeah, lots happening on the holiday front now.
Yeah, and we've had a busy week because we did an interview midweek with Steve Whitten, who's the founder of Menable, and that's actually on your podcast feed, so do check it out. And we will actually have an extract over the course of today's show. Yeah,
very open and an insightful interview there with Steve, wasn't it? Sharing, why he set it up in the first place, what prompted him to get involved with this, and the hard work that he's put in since launching it as well, and who he's working with and things like that. So, fascinating interview there with Steve.
Yeah, and interesting what he was saying about, Menable was launched to address mental health and well-being, in the automotive sector, but it's also about changing the culture. And he did have some interesting points to say about that.
Yeah, he did, and we've got an announcement ourselves, haven't we? With that.
We have, yeah, because we're actually joining forces with Menable, aren't we? We're going to act as partners with them, which means that we'll have regular messages from them, and hopefully various people from Menable, including Steve and the team he works with, popping onto the show to just give us an update on what's going on.
Yeah, it was great to become their sort of exclusive sort of podcast partner in terms of getting their voice heard across the sector on a regular basis. So really looking forward to it, and as I'm sure you are, Curtis, as you say there, sharing more information of what they're up to, the partnerships that they're working with across the automotive sector, and as you say, with the some of their patrons and the people involved with it as well. So looking forward to that one.
Yeah, so shall I tell you about this week's headlines?
Yes, please do.
Okay, so we've had the March figures for new cars and vans. We'll take a close look at those. A report from the Motor Ombudsman that more than half of car dealers believe Q2 sales will be higher than pre-COVID levels. We've got the interview with Steve Whitten. We'll just have an extract from that. We've got an exclusive from eBay Motors Group looking at the most searched used car brands in March. Motorpoints, we've got an update from them. They released a trading update during the week. So they actually completed 52% of used car sales online during the COVID period. So some encouraging figures from them, and customers expect greater payment flexibility as at garages post lockdown. So some research there from Bumper, and we'll finish off with it's an interesting development from Octopus Energy. They've launched a car leasing scheme.
Yeah, it's. I mean, that's an interesting one. That, and looking forward to us having a chat about that at the end of the show, Curtis. Because again, I mean, we've talked about EV and things like this, but actually that energy provider getting involved with vehicle leasing, particularly around the EV sector, it's an interesting one, isn't it, in terms of that tax benefits and savings.
Yeah, and it's indicative of what's going to happen because I think this is the first time that an energy provider has actually come to the fore and got into car leasing. So interesting development there.
So we'll kick off, as you say, there with the new car market registrations for March, and these obviously were widely anticipated as to what they would result in, how much activity would happen throughout March as dealers continued in a restricted environment through click and collect, and we know there's other challenges outside of that with the semiconductor supply issues, etc., and still in the world of a post-Brexit environment and things like this, but I think it's not all bad, is it? I think we saw an 11.5% increase on last year, albeit still down 38% on normal 2019 figures. But you know what? The dealers are still in lockdown.
Yeah, exactly. It is a rise, and there was a lot of comments on social media and indeed across the media about the increase in sales. Some of the spin was possibly over positive because it lacked the context that you just gave it there. Because let's not forget that as recently as 2019 there were 458,000 cars registered in March, and this March 283,000 were registered. So a remarkable result considering that showrooms were still closed to face-to-face transactions with customers. So these cars were sold over the phone and online. So it's an impressive result.
It is, yeah, and the story we're talking about is in AM Online. That the headline leads with UK new car market strengthens for the first time since August. So, again, we kind of forget what we've been through, but as you say, there a lot of activity, and interestingly, although private compared to last year was still 4.1% down, which to hold that, we went into lockdown throughout March of last year, and we know that a lot of the activity in a March month is at the back end of the month. So it's sort of the sector shut down the 23rd of March, as everybody knows, and ahead of that last minute activity. But interestingly, fleet has risen to 151,000, up 28.7% on last year. So it gets us thinking a little bit as to what those registrations are and what sector those registrations will be going in terms of that activity. Because as you know, the things can be tagged as fleet that may be tactical or pre-reg activity. But positively, every new car turns into a used car at some point in its life. So it's all positive for the sector.
Yeah, and you mentioned pre-reg, which is a term we haven't really used much over recent months because there's been no cause for it. But yes, I mean, it does point towards a certain amount of pre-reg activity, doesn't it? And one of our stories later will be about this expectation in Q2. And a lot of those pre-regs, if they are indeed pre-regs, will start feeding into Q2. So we'll see what happens there. Some interesting movements on fuel choice because diesel. I mean, we've been tracking the decline of diesel for the last couple of years, but down 31.4% in March, taking an 11% market share. Petrol was down 10%, but you start looking at the alternative fueled vehicles and there's some big movements here. So battery electric vehicles, BEVs, were up 88.2%, taking a 7.7% market share. Plug-in hybrid electric vehicles up 152%, taking a 6% share. And hybrids, they were up 42%, taking a 7.6% share. So, yeah, we have been tracking this over the last months and years, and we're really starting to see this momentum now, aren't we?
We are, and it is going to be interesting when we get back to whatever that new normal market looks like as dealerships open and we head into sort of the remainder of 2021 as to what happens in that sort of alternative fuel sector, and we're constantly talking about it, so one to watch out for. Just a sort of a little thing on the new car side of things that. I'm launching a new quarterly report that's due for launch on Monday, the 12th of April, just as dealers open. Maybe the readership might be a little bit low on that first day, but hopefully it'll be useful. And that's really autofocus, so it is a quarterly report, and it's quarterly insight really for the automotive sector, and that's looking at new and used forecasts for the short term and long term, and some other areas such as EV, and one or two things with working with Grant Thornton and NFDA. So maybe worth keeping your eye out for that, and we'll talk about it more next week possibly.
And I'm assuming there'll be links to that across your social media channels.
We'll be fairly busy in this social space, as you would expect, Curtis. But yeah, I mean, it is about insight. It's about sharing. Yeah. We do the annual insight report now that we've done for 3 years, and we'll be doing it again this year. This is distilling that down a little bit to the here and now, the short term, what's happening in the market now. So for when we're talking about new cars, as we've just been saying, there is actually what does that look like for the next quarter. What should dealers think about for the next 3 months as we head through sort of Q2 for the new and used car market.
Yeah, and heading over to Motor Trader, the headline there is van sales rise 85% in March, but market still adrift. So again, it's a positive because the new van market was up year on year. So the market grew by 85.5% in March, with 56,122 units registered. It was apparently the largest ever increase since the switch to the two-plate system in 1999. But we need some context here, because it's against the decline last March when we went into lockdown. So we're not comparing like for like here.
No, but as you said before the show, I mean, in terms of a normal March, it's fairly strong, isn't it? It's really for LCV.
Yeah, because the SMMT have tracked the 5-year average in the performance in the year to date. So performance year to date is up 43.4% for Q1, and it's only slightly down below the pre-pandemic levels. The SMMT calculate that it's only 1% down on that 5-year average, and that's based on just over 98,000 registrations in Q1.
So with all things considered, that's a strong market, isn't it? We can't deny that for LCV, and we talk about it on a regular basis within our business. That the strength of the LCV just seems to be continuing at the minute. So one that we'll be watching.
Yeah, it's just that headline figure. The market grew 85.5%. So that's really where the context needs to be put in place.
And heading over to car dealer now, and this is more than half of car dealers believe Q2 sales will be higher than pre-COVID levels. So a little bit of insight there as to what to expect into Q2.
Yeah, some intriguing research here from the Motor Ombudsman. So they asked franchised and independent dealers accredited to their vehicle sales code a series of questions ahead of showrooms reopening this coming week. So they found that 29% said they believe the new car market would be comparatively lower. 18% said they think it will stay the same, but more than half, 53%, believe new car sales will actually be higher in Q2 than they were in the same period in 2019. And that's the absolute key, isn't it? Because that's pre-pandemic levels.
Yeah, and again, looking at some of the analysis I've been looking at, the Q1 has certainly shifted over the years. I mean, if you look at 2018, we did as many as 718,000 in the first quarter of the year, dropping down in 2019 to 701, and then obviously in 2020 we did 483, whereas the running average between the year 2000 and 2019 is 664. So you look at them 2018, 2019 figures, significantly higher than the running average for the quarter, and obviously we know we finished in 425 in the first quarter of this year. So again, if we can get any increase in Q2, it'll be a positive recovery for the sector.
Yeah, and because the Motor Ombudsman also has independence as part of its accredited scheme, they asked about used car sales, and more than 2/3, so that was 70% of dealers, predicted that this sector will grow in the period from April to June. More than half, 53%, were concerned that footfall could be affected by the number of people who are still on furlough, and the impact that could have on affordability as well. And that they also asked about social distancing. So 36% of respondents said they were worried about how this will make it difficult to host events in showrooms, and 29% were worried about how it could impact the actual physical sales process.
Yeah, it's going to be certainly one to watch there. So, and we've had some results this week as well, haven't we, from Motorpoint?
We have, yes. So Motorpoint completed 52% of used car sales online in COVID hits 2020. So this report is from AM Online, and it's based on a trading update from Motorpoint. I think the final figures are out in June, but this gives us a really good feel for how Motorpoint performed in the year up to the end of March. So as I said, 52% of its used car sales were completed online during this period, and this prompted Motorpoint to say this has exceeded their expectations as the pandemic threatened to devastate the sector's sales performance.
Yeah, as you say there, 22,000 units sold online, with 3,300 of those sold in March alone. So saying that online sales, as you say there, grew 89% year on year. So again, demonstrating this switch from purely digital, a physical environment to that sort of digital environment. And we're talking a lot at the minute about what that will look like going forward. This sort of blend, this hybrid now between physical and digital, as these retailers have really embraced that digital environment. And Motorpoint demonstrating that that capabilities that they've now got in the online click and collect world now, isn't it, in terms of that performance?
Yes, and home deliveries actually accounting for 57% of those transactions. So, a good result there from Motorpoint. Yeah. So you're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines, and available by subscribing on Apple Podcasts, Google Podcasts, Spotify, Amazon Music, or wherever you find your favourite podcasts. Also, if you'd like to come on the show or have any news stories for us, then just drop us an email at motortraderadio@yahoo.com. And now we're going to have an extract from that interview we mentioned with Steve Whitten, who is the founder of Men Able.
I mean, in terms of what's going on within the automotive business, what are the key factors that the automotive sector needs to address to achieve what you describe as the well-being culture? Because I think where you're coming from with this is the culture, isn't it? This isn't about fixing a problem. This is about changing the culture of the problem.
Yeah, it is. And I mean, I think, at the top level, you have the manufacturers producing cars, and the industry is geared up for mass production. And I think when you have that set up, then clearly you're going to need an outlet, and those outlets are going to get targets. And many businesses have got a lot of money invested, so they're going to want a return. And I think over the years, what we've seen is the pressure has just increased and increased and increased. And I know many young people, or well, not so much, not just young people, lots of people in the industry working many hours to try and eke out a living in a fast-paced, competitive environment. And of course, that feeds into the stereotypical behaviours of men. And I think we've got I boil it down to, we've got three issues in the industry. One is management. I think we have a legacy of really promoting for confidence, not competence. And that's a big generalization, I know. And I know there's a lot of companies that do some great work around management development. But we worked with one OEM a couple of years ago who actually said they've got 1,700 managers in their network who've never had any proper management development. They've been on the course of how to do an interview and how to hold a disciplinary conversation, but they've not done any management development that you would expect to see outside. I think the next issue is recruitment. I think we have an issue of recruiting the right people and getting them to stay, and putting in place the right methods to get the best talent into the industry. I think we do quite well, considering actually that we don't have that, but I think there's a lot more we could do. And as somebody who's run 3 fairly successful training businesses, the third element for me is training. And I think, I'd be so bold as to say that a lot of the training that we do in the industry doesn't work. It's very much about, achieving the objectives and the results that we need. And it really just sort of trains and develops on the tip of the iceberg. It doesn't get underneath and properly work on the character side of people and helping them develop their all-round skills. And I think, again, put all of that together. My evidence for that, by the way, is for many years running training courses and inspiring people, and at the end of the day having them say, when are our managers going on this? Because they're the ones who really need this development. Or opening up a training course with the words, what time is this over, mate? I've got one going out at 4.
So as I said there, again, at the start of the show, very insightful, very open from Steve there, right at the start of the interview, and it's great that you can tell the passion, can't you, from Steve, in terms of what he's doing, why he's doing it, why he wants to get involved, why he's partnered with us to get involved with this kind of thing, about sharing this voice. And as you said right at the start, it is about the culture, isn't it? It's not necessarily about mending afterwards, and he makes a good point of that within the interview. It's not about repairing it, it's about stopping it in the first place. It's changing the culture. So great interview.
Yeah, no, it is fascinating, and Steve was incredibly open and candid because he was prompted by his personal circumstances. So definitely worth catching up on that podcast, which should be in your podcast feed.
So moving on over to Motor Trader, and this is a report out from Bumper that used to be Auto Service Finance, and we mentioned it recently with the move there from Bumper, and they've been looking at sort of what customers expect in terms of payment flexibility in a post-lockdown environment for garages, haven't they, Curtis?
Yeah, so they researched 2,635 car owners about how they expect to pay for servicing and repair jobs. And you and I know that you can take your car in for a service or a repair job and be faced with a hefty unplanned bill. So they asked customers how they would like to treat these bills in the future. So when asked for their main concerns about getting cars serviced or repaired, over half, so 58%, cited the cost, and inconvenience was only an issue for 3%, while 36% said it was a combination of both. Now, when asked what size of bill would prompt them to pay by using interest-free credit instead, the majority, 38%, said they would use it for any amount. So that's quite an interesting result there. Yeah. So if they're offered interest-free credit to pay these bills, then that's a logical way for them to go, and it feeds in with the way that we are all budgeting at the moment on a monthly basis.
Yeah, and they pulled out some data there that over a quarter said that they would use the bills costing over $250, 22% for bills over $500, and 13% for bills over $750. So it's a good opportunity for the sector, and I think this is. You probably from a dealer perspective, I don't know what your view is on this. I mean, this is a great facility for dealers to have at the fingertips to offer their customers, because it makes sure that work comes in to the dealer. The customers get their work done, which is paramount for safety half the time, and they're quite happy funding it on a 0% as well. So it's a great result for everybody on this one.
Yeah, it's a win-win.
It is win-win-win.
Yeah.
So
now, we've got some exclusive. Yes, we've got an exclusive on the podcast. So some research carried out by eBay Motors Group into the top 10 most viewed car brands on motors.co.uk. So. It wouldn't be a normal podcast unless we.
I'm going to say somebody's got found a top 10 there. We can't get through one without one.
So these are the 10 most viewed and searched for car brands over the course of March, and very, very much in the sort of used car arena. So number 10, Toyota. Number 9, Land Rover. Number 8, Peugeot. Number 7, Nissan. Number 6, Audi. Into the top 5 with Mercedes-Benz at number 5. Number 4, BMW. Number 3, Vauxhall. Number 2, Volkswagen. And number 1, Ford.
Yeah, number 1, Ford jumps out quite a bit, doesn't it? I mean, it's a significant jump up for Ford, which demonstrates the volumes of Fords that are in the market, I suspect.
Yes, they saw a year-on-year increase, and also the strength of some of the premium brands, because within the top 10 we've got Land Rover, we've got Mercedes, Audi, BMW. So some strong showings there from the premium brands.
And they can find this data, can't they? They'll be able to be available on the eBay Motors website at some point, I suspect.
Yes, definitely. Probably from Monday. So within the research, they looked at average days to sell for franchise dealers and found it improved month on month, averaging 44.6 days compared to 49.1 days in February, while average stock levels increased marginally from 49.5 units to 51.3.
Yeah, there's a quote there from Dermot Keller, who's part of eBay Motors and a good friend of ours as well, and says that with the UK in lockdown throughout March, the used car market continued to show remarkable resilience, with the franchise dealers achieving their fastest stock turn for so far this year on the back of high levels of online consumer activity. So I think we know that there is this great anticipation now, isn't there, as showrooms reopen, and it's truly demonstrated through this activity through places such as eBay Motors.
Yeah, and finally this week, so we're heading over to Motoring Research, and the headline is Octopus Energy launches electric car leasing scheme. Now, this actually picked up quite a bit of coverage during the week, and it is an interesting one, as we alluded to at the beginning of the show, because Octopus Energy, they're a utilities provider. They provide gas and electricity, but they've launched a leasing scheme for electric vehicles.
Yeah, they're describing it as a one-stop shop for electric car drivers, aren't they? With the quote there coming from Fiona Howarth, who's the CEO of Octopus Energy. And a great opportunity this, because I suspect there's some tax benefits being utilised here, because the savings look fairly significant for the sector, don't for the drivers.
Yeah, and what's particularly interesting is that it's aimed at private motorists, but also company car drivers who are on salary sacrifice schemes, that they can also participate and benefit in this. And they do illustrate this with some of the savings that can be achieved on things like Tesla Model 3s and the Peugeot E2008.
So, for that, I suppose they're looking at an employee, that leaves a business for a short notice. A company car can be an expensive asset, but Octopus Energy will negate that risk, won't they? That's what they're saying is, they can do this leasing through Octopus and get these vehicles, get access to the electric vehicle market through their salary sacrifice and not worry about the long-term risk. But again, I mean, we mentioned it earlier, but a great initiative here for the growth of EVs, aren't they? And I personally think we'll see a lot more of this kind of thing happening as we move forward towards that 2030 deadline.
Yeah, it's very creative thinking, and I agree. I think it's indicative of the sort of trends we can expect to see from possibly other utility companies and interested parties in promoting EV usage.
But it is significant. I mean, as you said right at the start there, the fact that it is a energy company who is entering the sector to offer their probably expertise in the EV sector and access to this product as well for the drivers. So a great move, but one that I think we're going to see a lot more of, and I think we'll be talking a lot more of on the podcast as we move forward, I suspect, Curtis.
Yeah, and that's all for this week. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chat that matters. We'd like to wish good luck to dealers in England and Wales reopening their showrooms on Monday. Do let us know how you're getting on, and also do check out your podcast feed for our interview with Steve Whitten, as we said, talking about the issue of raising awareness of mental health and well-being amongst men in the automotive sector. Philip and I are back again next weekend with the week's headlines. Until then, it's goodbye from me.
And it's goodbye from him.